we are going to have a few extra shirts. So if you are interested, reach out to either me, Brian, or anyone, and we can probably get you some details on that.
Awesome. Thank you, Damien. If you're interested in our future events, you can pull out your phone and scan the QR code right there. We'll pull up our link tree for all our daily events, our general meetings, our Venmo, our Slack, all of our links. So check that one out.
Yep.
And then our schedule, last week we had a Matt Magil from CFAOC. And today we have Albert. Next week we have the mini RSC final round presentation where Cameron and Kyle will be presenting. And lastly, we have Dr. Roman on economic data. And this will be a Finance Society collaboration on May 6th.
And I have one last announcement. I don't know if we made a slide for it, but if you have been coming to our SUR meetings and you like what we do here, we are looking to expand for the fall and opening up some positions in our e-board. So we'll try and put the link to the interest form in the chat. Otherwise, feel free to reach out to us and we can send you that. But if you're interested, please reach out. We're definitely looking for a few people.
Awesome. Thank you, Brian. So we'll be going into presenting Albert. We'll be giving a technical review on how blockchain and cryptocurrencies work. So I'll be handing it to you, Albie. I'll stop sharing. Take it away.
Okay, thank you very much. Let me see if I can share my screen as every Zoom starts now. Okay, screen one share. Can I get a confirmation that we see my presentation?
Yep.
Fantastic. Thank you very much. All right, Team Smith, SMIC, and Bronco Asset Management. I mean, this past 2 years has been an absolutely incredible 2 years for the entire organization. I know that you have won both 2020 and 2021 CFA OC's first place. Congratulations on that. And also, maybe even more exciting is the recent accumulation of about $150,000 towards the Bronco Asset Management Fund to be worked with. So huge congratulations. I'm very excited for you. Amazing things are occurring, and it's something that everybody can be proud of. Now, if you would like to record, it is okay. That is not a big deal. And today we're going to be talking about blockchain. This is really the possibility of the future of money. With blockchain, there are so much potential to occur, not just in money. And we'll discuss a couple of other nuances that are also associated with the blockchain. But for the purposes of this demonstration, we'll primarily go through cryptocurrencies and how blockchain functions with money. Well, hello everybody, my name is Albert Fattal. I am here because I am extremely excited to talk about blockchain. I generally also enjoy talking about artificial intelligence, my alternative research as well. But again, for the purposes of this demonstration, with the connection of money and financial asset management, we'll be sticking to blockchain primarily. Now, you can find me at my website, albertfattal.com. And here's a quick roadmap of what we will be discussing today. Let me see if I can get my laser. Here we go. So we'll start out with a brief history of not just blockchain, cryptocurrency, but money itself. Then we'll go ahead and drive down the road over here. We'll talk a little bit about the different types of cryptocurrencies that one might associate with as we continue driving up this road. We'll talk about the features of blockchain. This can get a little heavy. I'll try to keep it as light as possible. Then we'll continue driving down this road, the winding S-curve road, down to the technical demonstration of the blockchain. We will, in fact, see how the blockchain functions. After that, we'll talk about the criticism. And there's a lot of criticism that have occurred and been said on not just blockchain, but as well as cryptocurrency, and in fact, specifically cryptocurrencies. And then finally, we'll open it up to questions, and I may even answer a couple of questions along the way, depending on how the room feels. So let's start this out with an interesting quote, and let's really conceptualize what this quote is saying. So it says, inflation is legalized counterfeiting. Counterfeiting is criminalized inflation. Now, inflation and counterfeiting are two of the same thing. They're just used by different agents. Inflation is used by generally large entities or agents who are in power, who have the control over societies, whereas counterfeiting, again, inflation is the same thing as counterfeiting. It's producing the same outcome in the M2 monetary supply, not just the global, but particularly in the US, as it is the global reserve. But counterfeiting, on the other hand, is considered illegal, although it's the same thing. Why is counterfeiting illegal? Counterfeiting is illegal because of who is creating the money. And that's really the only difference between the two of those. This is a phenomenal quote by Robert Breedlove. Now, let's go ahead and get started with the history of not just blockchain, but money itself. And this is going to be a question to the audience. Now, I'd like to ask you, what is money? Feel free to unmute, maybe even chat if you don't want to unmute. But this is a question to the audience. If anybody wants to chime in, I'll let you go ahead. What is money? And I don't see the chat, so if we have any chats, just somebody can maybe.
Some people are saying medium of exchange. It's a medium of exchange. It's what we exchange our hours for. Fiat currency. A form of communication that represents value.
Yeah, and these are all, they sound reasonable. One of them may be surprising of the answers that I've heard. And it sounds like we have some incredibly intelligent people on the line that probably know a lot more than the average individual based on the answers that we've received. So I have one more question for everybody. We've talked about money. What about currency? What is currency? Again, if you'd like to unmute, go ahead, unmute. It's not necessary. You can also throw in an answer onto the chat. I'll give it a minute or so to maybe get some answers. And one thing maybe we can think about is there a difference between money as well as currency? We can figure this out real soon. So do we have any chat answers at this point of what is currency?
People are saying a resource, assets, the units of money. Mai says currency equals a form of money. So.
Yeah, these are, again, great answers. And I'm going to talk a little bit about maybe the difference of money versus currency, because there is a big difference between money versus currency. They are not the same. These are two very different things, although they have a lot of the same features and functionality. Money is a base layer one type of commodity to exchange with another individual, whereas currency is a layer two. And then we'll be discussing both layer one and layer two. Essentially, layer two is a less valuable layer than a base layer one, such as gold, for example. So let's go ahead and chat a little bit about money. How did money begin? Money is a human construct. I mean, if, let's say hypothetically, some extraterrestrial alien civilization comes to Earth, it's unlikely that they would care or have any value between any form of money in the United States, in the world, anywhere on Earth. And in fact, I'm personally not aware of any animal, and I'm sure you're also not aware of any animal that has any value to money. This is purely psychological, a philosophy of the human construct, money. It was invented to make things a lot easier to conduct within our human lives, living in a human condition. Humans began trading eggs and rugs many years ago. We're talking like tens of thousands of years ago, and not just eggs and rugs. I mean, people had cows, they were farmers, and maybe let's say the neighbor was a metal forger, as I placed over here. How does one exchange something like eggs if they happen to be a farmer with the services of a metal forger? Maybe something like axes to assist in human productivity, maybe to build a house. That's not really an equal exchange between the two. And this causes a lot of complications. So this is often not an equal medium of exchange, and the complications that we've discussed. So discoveries did occur and emerge into the future. Now, in addition to these inconsistencies, we want to probably also understand that at some point, and even today, I should say, monks were human ledgers. Monks are meticulous, they're precise and methodical in everything they do. Their entire livelihood is based on the type of methodical lifestyle that they live. So, what better to have a human ledger than to assign them to monks? Now, a ledger is an individual who very specifically writes down what occurs within a community or a civilization. So let's talk about what is a more fair value and medium of exchange. At some point, about 600 before Common Era, this occurred in the Lydia Empire. This is currently modern day Turkey. Their civilization began creating this idea of gold as coins and other precious metals, such as silver, copper, and they use this in order to exchange different types of goods and services amongst their civilization and communities. Now, the interesting thing about gold is that it could be melted over and over thousands of times, nearly unlimited times. The properties of gold, the physical properties of gold, allow it to be malleable, to be melted and recreated without degradation. And this is a very special trait of gold and why it has persisted for hundreds of tens of thousands of years as a base layer one money. Now, in addition to that, it was also limited to a certain degree. You might have heard that gold has scarcity to it. Now, how much scarcity it has, nobody really knows. It's unlikely, in fact, it definitely is not likely that all the gold in the world has been mined. Every single year, the price of gold is further perpetually diluted based on the mining that is occurring. We're still finding gold today, and we're likely going to still find gold later. And now that we've embarked on a space exploration, what if we discover some meteorite or some outside terrestrial rock that has gold? And of course, this is unlikely to happen anytime soon. The technology and cost of this is too much. But at some point, it's probably going to occur in which space exploration will be able to mine outside minerals, bringing it to Earth, further diluting the value of gold as a base layer one money. Now, there are some problems with gold. It's heavy, it's cumbersome. If you've ever actually held a brick of gold, it is incredibly heavy. I'm not claiming I have a bunch of bricks of gold, but I've certainly I felt gold. It is incredibly heavy, and it's not something that you can just walk around with easily. In fact, gold coins themselves are not just bulky but heavy as well. So, what was the solution to all of this? At some point, somebody created a claim, a paper claim to gold. And this moves us on to our next slide. This is where things begin to get very interesting. And then we'll discuss how all of this deals with the philosophy of money, cryptocurrency, and what the blockchain attempts to fix that was at some point deteriorated. So banknotes began being used in exchange for gold. We learned earlier that gold is incredibly cumbersome to use. What is not cumbersome is a piece of paper by this new profession called the banker. And this is how banking began. Banking began with individuals who were collecting gold out of the form of need for convenience. Now, people didn't want to carry all the gold in their house. It was insecure. So people began creating businesses and buildings and high security vaults to store all of this. And in exchange with that, what they would do, these newly created bankers would then write notes, and the individuals trading the gold would have to trust that these bankers themselves were being truthful with how much they are putting on the paper, and that they in fact have that amount of gold within their vaults. Every community had their own bank, so it's not like there was centralized banking at this point, and this caused a lot of problems. And sometimes there were dishonest bankers who would give out gold notes to claims of the gold, more so in the amount than they actually have, which caused significant failures in many of these community banks. So one would have to trust that these bankers were honest ledgers in order to allow this to work. And for the most part, it worked, but the human condition always comes into play with this. It occurs today, it has always occurred. people will begin to be dishonest in order to create leverage for the amount of value that they have. So here's a picture of what Bank of Amsterdam looked like in the 1600s. Very interesting. And this is not when banking began. However, this is a good early conception of banking. Now, money and blockchain. We're now going to begin shifting into the blockchain. Gold was used to be the most valuable commodity on earth. At one point, gold used to be the most valuable commodity on earth for all of the reason we've discussed. It was somewhat convenient. It was heavy, yeah, but it can be melted over and over. It can be altered and shaped. It had a form of at least some form of convenience. In the year 2021, gold is not the most valuable commodity on earth. The most valuable commodity, one might think oil, and maybe at some point it is data. Data and computational power runs more of the entire global gross domestic output than any other type of commodity. Data powers the entire world today. And this is exactly what the blockchain uses to power its entire level one system. So we're already starting off on a good note to a perhaps probable alteration to something like a level one commodity as gold. Gold is the analog base layer one of money and therefore of control. It has always been a level of nation state control. Whoever owned the most gold had the most global power. Blockchain, in that respect, is the layer one of the equivalent of gold in the digital world. Blockchain itself is the infrastructure that powers it. And on that, there's layer two, which I'll discuss later on, which is Bitcoin. This is still very early in the stage. Let's keep this in mind. We're only about 12 years into Bitcoin. And I'll give you some interesting features and statistics on this later on. We're now entering into the fourth industrial revolution. This is something that's near and dear to my heart. I conducted significant research based on the fourth industrial revolution. I had a publication about 2 years ago based on the formation of artificial intelligence and blockchain impacting the future of civilizations, particularly around this new emergent industry 4.0. This is one of the greatest shifts that you are going to experience personally in your life, personally, very, very personally. So bartering at some point was necessary. And then we created ledgers. We've learned this. And at one point they were monks, and now they are in alternative forms. We've then created, as a human civilization, we articulate our brains to create more efficient systems. We've discovered that distributed ledgers, in fact, can be incredibly reliable. Unfortunately, the technology for most of human history was not there. We finally reached a point in our own civilization, in our own hominid history, where an immutable distributed ledger technology can enable this to function at 99%, more than 99% accuracy, something that was never, could have never, ever been able to be dreamed of in the past. So let's talk about the early blockchain. Where did the blockchain come from? Did you know that the blockchain, the term itself, is only about 12 years old? Before that, there were things like anonymous distributed file sharing, like LimeWire, Kazaa, uTorrent, Pirate Bay, BitTorrent. These were not considered blockchains at the time. This term didn't really exist. However, they incorporated the same fundamental aspects in which they used hash algorithms for distributed peer-to-peer sharing of data or files sharing for the purposes of a distributed file sharing system. Now, early concepts of money, cryptocurrency, began with something called DigiCash, D-Money, BitGold, Hashcash, and in fact, PayPal. And who owns PayPal at that time? Elon Musk, who is an interesting proponent. This is a fun fact. Did you know that Elon Musk was an early adopter, an early founder of the concept of cryptocurrency? And he definitely believes in it, as we see with his his multi-billion-dollar investment in Bitcoin. So now let's fast forward to the year 2008. We're almost done with this part. 2008 is when the first paper on the blockchain, or I'm sorry, on the Bitcoin was published. And this is the actual paper itself. You know what? Let me click it. This is interesting. What you're going to see right now is the actual publication by the fictitious individual named Satoshi Nakamoto. I shouldn't say fictitious, we presume him to be fictitious. This right here, you are witnessing the actual paper that really created the killer app of what is called cryptocurrency. And it's a very concise paper. It's only, I think, 8 pages long. It's not long. It's an easy read. I encourage everybody to read this because this will absolutely impact your life personally going into the future. This is fundamentally changing the entire game. So this is very interesting, very easy paper. Let's go back to the slide. So again, Satoshi Nakamoto, no, nobody is on a person or a team of people. This is probably strategically this way. Now imagine those power attempting to somebody named Satoshi Nakamoto who is completely disrupting the entire global power system. The best thing you can possibly do is become anonymous and never tether anything to yourself to something this powerful. It is completely open source. Anybody can edit and modify and use the code as they want. It is not centralized, right? It's not associated with any single entity. This is a radical difference from any other financial monetary system that currently exists. Nobody owns the stake or claim to Bitcoin. It is not owned by any entity whatsoever. It is just freely available for the world to be used in whichever way, the most ultimate form of free market capitalism. It alters the entire global banking and financial industry. It keeps nefarious actors from shutting it down, which we've mentioned. Oops, went too far. Let's go back. And so the term blockchain and cryptocurrency, you might not have known this, never was included once in the original paper that Satoshi Nakamoto published. Never once, although this is ironic because this is the paper that created the killer app, Bitcoin, of what popularized both blockchain and cryptocurrency. And then 2010 was the last time this fictitious or assumed fictitious pseudonym of Satoshi Nakamoto ever transacted online in any form. Here's another fun fact. No coins have ever moved from his wallet, his or her, I should say, its wallet. Nobody knows, which makes Nakamoto worth about $54 billion today, making it one of the richest agents in the world. And as cryptocurrency value and Bitcoin increases, we can imagine that this will become radically, perhaps one of the richest persons or its in the world. So let me read this part right here. Everybody is trying to figure out how to stop this thing. There's never been a greater enemy to the state in the history of humanity. This is a tool that's going to take away the most important power nation states and central banks hold. It's the most important game in the world. It's the whole game. To control the money is to control the world. And now we have this emergent money that cannot be controlled. There's never been a greater price to turn it off ever in the history of humanity. This is the single technology that has easily the power to alter the financial industry more than it has ever been altered in human history. When people begin to discover that there's really no trust in the form of money that they're using, that creates collapse within the entire system. Unfortunately, this is the system that most of us, we live in, and many of us were pretty intelligent based on the answers we've discussed earlier. We're very aware of this. Most people are not aware of this. The entire current financial system, it is going to collapse because it is a fiat system. You cannot, nobody can sustain indefinitely a fiat system. It devalues every single year. And if it doesn't 100% collapse, it will collapse so much that it would be worthless at some point. It's essentially 100% guaranteed. So now we're into this new emergence of financial technology. Fintech is a new category which disrupts the entire financial industry more than anything else in the past. Do we know who Gary Gensler is? He is the new chair of the Securities and Exchange Commission. This is phenomenal or awful for Bitcoin because he actually is a professional, an educated professional on cryptocurrency and banking. In fact, he has an MIT, he's an instructor in MIT where he created an open course that anybody can take based on blockchain and money. This man knows exactly what is happening in blockchain, and he is now the regulator of money, becoming the chair of the SEC. Now let's move on to the next set of slides. We're going to talk about the types of cryptocurrencies that are available. Currently, right now, cryptocurrency, Bitcoin itself, has a $2 trillion market cap. That's about where Apple is, and it's just beginning. Now, there's four primary forms of cryptocurrencies, digital currencies. There's Bitcoin, BTC. This is the original, most popular, most widely known cryptocurrency. And then we have another category that is considered altcoins. These are alternative coins. They include Ethereum, Binance, Cardano, Polkadot, XRP, Litecoin, and the now popular Dogecoin. This is the funny one, Dogecoin. Very interesting, the dynamics of it. There's over 900 altcoins, and coins, all of these have to have been launched after. If it's an altcoin, it launched after Bitcoin. Now, the other major category is called a stable coin. Stable because they are pegged or tethered to some form of existing monetary denomination like the United States dollars. They include Tether, True USD, Paxos Standard USD Coin, Binance USD. Again, all of these are tethered to existing denomination of money. And this provides a trait of limiting volatility, which Bitcoin is very well known for. Now we have the very interesting power struggle to try to control what is occurring by central banks. These are called the central bank digital currencies. We have likely all heard that China is, in fact, right now bringing this into production through their digital yuan. This is their central bank backed, essentially blockchain backed cryptocurrency. And we also know for a fact that every major bank, central bank in the world, is working to work on this, or else they become obsolete versus the alteration of technology. Bank of England, Bank of Canada, the Federal Reserve, these are all digital currencies that are radically being developed by the central banks, arguably the most powerful entities in the world, because they can become obsolete, and becoming obsolete loses entire global power. Every major central bank is in fact doing these. Now, let's talk a little bit about the types of exchanges. When somebody wants to purchase some form of cryptocurrency, where does one go to? There's a couple of places. There's many places that one can go to, but these are some of the more popular places or exchanges that somebody can purchase cryptocurrency from. There's Binance, BlockFi, Cash App, Coinbase, and I don't want to say Robinhood, but I threw this in here because I need to mention that this is not an actual cryptocurrency exchange. When somebody purchases from Robinhood, they are actually receiving derivatives, and they are not receiving their keys, which we'll discuss later on. You're basically buying fake cryptocurrency. If one is interested in buying cryptocurrency, maybe not the wisest idea to get it from Robinhood. And then of course there's mining. This is the most pure way to accumulate cryptocurrencies. Now, in terms of what cryptocurrency is, there's a lot of confusion about it. A lot of people seem to tether it with something such as gold. I would never, in my opinion, and probably in many professionals' opinion, would ever tether or peg gold to cryptocurrencies, because these are radically different asset classes. They function very differently. So in fact, it should be treated, cryptocurrencies should be treated as its own. So in addition to equities, we have real estate, bonds, and fixed income. The biggest form of equity, there's futures, currencies, commodities, collectibles, and art. And then there's cryptocurrency. This is a new form of asset class that is being added into these classical asset classes. This is going to be very fun for everybody to see. I want you all to really pay attention to this. Since the inception of Bitcoin, let's see how it has performed. And here's a spoiler alert. Bitcoin is the highest performing asset class in the past 10 years by a margin that is so far above second place that it is incomparable. If you had bought Bitcoin in 2011, you would have made a 1,400% return. The next year, 186% return. The year after that, you would have made a 5,000% return. And these are all lined up to the top performing asset classes. Bitcoin in the past decade is the #1 highest performer. Then there's the NASDAQ 100, US large caps, US small caps, US REITs, real estate investment trusts, long-term duration treasuries, et cetera, et cetera. We can go down. You can see this on your own at a future date. But let's go over here. Let's look at the rate of return from 2011 to 2012. I don't even know how many digits this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 20 million%. That is a ridiculous number. Now, if we annualize that, that's 230% year over year. This is an insane number. Now, there's no promise that this is going to continue happening. It can collapse tomorrow for all we know. Nobody really knows, right? But just looking at historical, it's just so interesting to see that Bitcoin itself is the highest performing by a large margin. In fact, second place takes 20% per year, a measly 20% by the US NASDAQ 100. Now we're going to get a little bit technical. We've talked about what cryptocurrencies are, the origination of money. Let's focus on how this all works. What are the technicals behind this? Can anybody read me the time right now, just so that I'm on track?
12:37.
Oh, wow, we're going to have to skip a lot of things. Okay. All right. So let's go through this fast. Also, maybe it's good that we're going through this fast because this can be heavy. Let's talk about technology levels. There are 3 major technology levels, right? There's a technology level 1, 2, and 3. Technology level 1 is a foundational technology. This can be associated with something like the internet. When the internet came out, this is considered a level 1 technology. It really doesn't do much other than create a platform or foundation. This is equivalent to what the blockchain is. The blockchain is a level 1 technology. Then we have a level 2 technology. Level 2 technologies are assisted and leveraged over the foundation of a level 1. For the internet, that was something like the web browser, for example, or the computer, which can tap into the internet as a level 1. In the purposes of blockchain and cryptocurrency is this level 2 technology system that leverages the blockchain as a level 1. And then it gets very complicated in technology level 3. These are levels of technology that are so far into the future that they are unpredictable. They're incredibly complex. Nobody really knows what can occur. And this causes a lot of risk mitigation. Oftentimes, these are hypothesized and may never occur based on shifting and altering technology, changing the trajectory of where they will go. So this is, it's like a moving goalpost, but it's also important to have sensitivity analysis as to where technology and potential failures can be taken into the direction of to be avoided. So these are the 3 major levels of technologies. Earlier, we discussed layers of the blockchain and Bitcoin. These are the technical indications of what blockchain is. Blockchain as a layer 1 and a technology level 1 is the foundation of the cryptocurrency. The equivalent to that is the classical T+4 settlement. Now, the difference is that the blockchain settles in 10 minutes. Now, classical settling oftentimes is 4 business days. Already, there's a radical jump. And again, not just radical, but insanely radical jump in technological furtherance versus our classical systems being used now. Who would not want to do that? I mean, it's clear who the winner is. And now there's also the layer 2. One of the criticism is that blockchain might close transactions every 10 minutes. What if you need it faster? That's where layer 2 comes about. In classical systems, that's the Visa network, the credit card networks. These are layers that transact and close transactions essentially instantly. And in the blockchain, there's also that same level of equivalent, which is something like the Lightning Network. This is an overlay of the network that is built over a layer 1 technology like the blockchain. They're much, much quicker. So this is, we're going to skip this because this is going to get technical and I'd like to use our time in other more interesting technical things based on the availability of time. So the technical features of the blockchain, we have something called proof of work versus proof of stake. Proof of work is a miner creating work, resolving algorithms, very complex algorithm versus proof of stake. Proof of stake as an agent participating in the network as a custodial participant, you would need to give up some form of stake to be held accountable for the work and verification that one would do amongst the blockchain. Now, the blockchain is powered by computational power, as we discussed earlier, the most valuable commodity on earth, to solve very complex cryptographic mathematical algorithms. These are algorithms that, of course, humans are incapable of solving. Otherwise, we would not need the blockchain. And again, monks used to do this at one point, but now we have surpassed that. We need something far more effective than human brain power, because human abilities have significant failures, inherent failures. Technology can resolve that. So one way to solve this is by just doing brute force algorithms. And that's exactly what it sounds like. These are mathematical computational algorithms that are just crunching through significantly complex mathematics, just going through them one by one through brute force. No system in place. And this is the most popular way to do this. It's really a game of who can get to the answer the quickest. Now, if anybody has ever heard of forks in the blockchain, this is a very real consensus that can occur. When there is, remember the blockchain is distributed, so it needs nodes to ping with each other. Now, if there is a misconsensus between what the entire distributed ledger agrees upon, then there can be a fork. That's when one major category is then split up to another or even third or fourth fork. This is undesirable for the most part, but it does occur. Again, forks are simply when the chain of blocks are split and begin forking in a different direction based on disagreement. This is so important to learn, but we're going to have to skip some of this because I want to take us to our technical demonstration. I will talk about this: cold storage versus hot wallet. This is incredibly important for anybody who may have an interest in accumulating cryptocurrencies or any form of digital cryptocurrency blockchain form of money. Cold storage is what we see right here. If we see my laser point on the top right, this is an actual hardware physical wallet that you can transfer your private keys into so that it is not accessible on the internet and thus less prone to hacking. This is a slower form of monetary exchange, but significantly more secure. Then we have right here, right below this image right here, is a metal plaque where one is able to either put their public and private key etched onto it. So when you function around cryptocurrency, you have to have a private key, which an agent should never ever disclose this to anybody unless you want to lose all of your currencies. So one way to do this is to place it on something that perhaps if there's a house fire, if you write it down on a paper and it gets burned or water damage, you've lost all of your money. So you'd like to likely etch it on some form of material that is resistant to something like house fires, maybe place it somewhere, of course, very safe. But the difference is that hot wallets are on typically exchanges or computational networks in the actual network itself. This is far higher in terms of somebody attempting to hack your money. This will occur far higher on a hot wallet. Quickly go through this one. Currently, Bitcoin is $55,000. A Satoshi is 100 millionth of a Bitcoin, which means that it's 0.0005, blah, 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 blah. And this is the fascinating fact. The entire Bitcoin uptime of the network has a success ratio 99.9863 going on. What does that mean? This means that in the past 12 years, the entire Bitcoin network has only gone down 2 times, one in 2010 in its early years, and another time in 2013 in its early years. And they were only down for about 8 and 6 hours. Outside of that, the Bitcoin network has never gone down. It's been almost 3,000 days since it last went down for 6 hours. That makes it far more successful than any other monetary form of exchange, by the way. Let's see, now we have other blockchain uses. Unfortunately, I'm going to have to skip this. But you know what, let me touch up on one thing. One of my previous research dealt with the supply chain logistics as well as Internet of Things. When IoT and things like transportation networks connect into the blockchain, that creates absolute certification and verification of the types of commodities and goods that are transacted from one point or one node to a different node. But I'll keep it at there. Now, this is the fun part. Now we're getting into the technical demonstration of the blockchain. And for that, let me see if I can draw right here. So let's see, shapes, blockchain. What we're gonna do is we're gonna demonstrate what a schematic of the blockchain looks like. So right here, this is one block, which is considered a Genesis block. And looks like we're freezing up. There we go. Let's do one more. We'll do 3 right here. So this is a blockchain, right? We have 3 blocks, and in the real block, it actually goes on indefinitely. Now let's create a chain that brings this all together. There must be something that looks like a chain over here. Let's see. Let's do oh, here we go. We can do this right here. So copy, paste. Now we're gonna have to use our imaginations when we look at this, because this obviously isn't a chain, but it's the closest I can replicate to a chain. Now what we just did, and pretend this is over here. I don't want to waste our time for the time being. This is the first block. The first block is considered a Genesis block, or block 0 in binary terms. The reason why this is called the Genesis block isn't because it's just the first block, which of course it is. It's because it does not have a hash algorithm connected to a previous block. It is the creator block. Now, what's important in the blockchain is to have a timestamp on the blockchain. Timestamp right here. And the reason why timestamps are important is because it sequentially tells the blockchain node of networks where each block and the data contained within the block goes in the formation of the entire blockchain. Now, the next block, block 2, block 3, infinity block until the blockchain is no longer functioning. These are all further blocks that are chained ultimately to the very first Genesis block that contain their own unique data or form of information. And with that, they also have very unique hash codes. So these hash codes link from the existing block, which is this block 2 in this scenario, to the hash code of block 1. And if the hash code was broken anywhere within the blockchain, anything that was unbroken previous or before that broken or hacked hash would be completely okay. However, everything after that would either create a fork or become rejected by the node of networks that participate in the distributed ledger technology. And each chain has its own unique signature. We're actually going to see this now. Let's hope that's the next slide, because I at least want to get us through this. Yes, this is good news. Okay. So let's look at how the blockchain really works. This is where it gets really exciting. Oops. Uh-oh. Just give it a second. It seems like it's slowing down, but once that fires up, here we go. Here we go. Okay, so let's look at the blockchain itself, because this is what everybody is always interested in. So what we see here is a SHA, a secure hash algorithm, 256-bit hash. Right here's the hash. This is the unique identifying code. And if I type anything right here, we can see that the hash itself uniquely alters and begins to change. Now, even if I type one tiny letter or digit, let's say 1, the entire hash completely alters. This is important to understand because the data gets solidified in the blockchain, creating a unique hash. So now let's introduce the block itself. This is the first block, or in this purpose, let's hypothesize that it's the first block being chained to a Genesis, right? It has the nuance of 72608. We have the data. I'm going to arbitrarily write random data. We see that it's turned red. The reason why it turned red is because we broke the actual hash algorithm and secure key. What we can do to fix that is to mine it. What this is doing, is allowing the nodes to go through the mathematical algorithm. And it may take a couple of moments here as this is actually happening. It's actually running the blockchain code to hash the key. And once it does, it will light up green because it has appropriately added the correct keys right here. It took maybe 6 seconds for this Of course, the actual blockchain itself is significantly more complex. It's going to take a lot more computational power than this does. So what this does is that it has rehashed this altered code in order to sign it and bring it over to now what is the blockchain itself. So we drew earlier different blocks. That's what we're demonstrating right here. This first one is the first, or let's call it the first block. Of course, before that, there's the Genesis block. We will continue doing this. Let's see how the blockchain is secure. Right now, they are all associated. I'm going to do a search. Do we see how all of these lit up? That's because block number 3 is cryptographically linked to block number 2, which is right over here. And in fact, as you may have imagined, block number 2 is cryptographically linked to block number 1, as we can see the highlight, which is the exact hash. Now, I'm going to highlight this right here to demonstrate if I were to break anything in this block, if I were a malicious hacker going into the blockchain and I decided to, let's say, hack it and say I want to give myself $100,000, that has now altered the secure hash key, which then breaks the blockchain, creating a fork in the entire network. And everything after that is also broken, which means that this is incredibly difficult to do. Possible, but incredibly difficult to do. Now, what we can do is begin mining it, and that's what a hacker would want to do within the blockchain. That's using computational power in order to resolve these deficiencies to fool the system into believing that they are correct. So I can do this, and I'm not going to go ahead and do the entire thing. But once this is complete, let's go to the distributed ledger. Now, what this is, and this is the beauty of a DLT, a distributed ledger technology, is that in addition to that, we don't have just one peer. We have numerous peers who hold copies of each part of this blockchain right here. So if I were to change something here, of course, this will alter the entire blockchain itself going forward, moving forward. And then we would understand that based on the entire network that are involved and participate as custodials of the blockchain, would see that there is an inconsistency between peer A's blockchain versus all the other millions of blockchains. That would automatically boot peer A out of the system, creating absolute resiliency within the entire blockchain. So that means that data in the blockchain is so accurate, absolutely accurate, in the sense that because technology did not exist previous to this, this is the highest level of accuracy that any system, human invention, has ever comprehended, was able to create so far. Then we have tokens. Tokens are something like cryptocurrency. When somebody begins to alter and exchange money, instead of data, we have a ledger of all of the information that is being transacted between peers on the distributed ledger technology. We see that Emily is sending to Jackson $10, and we know that Emily sent Jackson $10 because if we go back, there is a connected ledger from the past saying that Emily, in fact, did originate and does have that money, so that there is not what is called the double spending problem, when somebody on a digital currency spends 2 times while not depleting the amount of funds, the numerical funds that they have, in order to have absolute amounts. Can I ask what is the time right now, please?
Yeah, I'll be
55.
yeah, we're just about 6
So
minutes
let
out.
me, yeah, this is going to have to be a multi amount of meetings. So let me stop
Definitely.
right here. And if there are any questions, I would be delighted to answer that. Unfortunately, we didn't go through the criticisms, which are very important, but maybe in the future we might pick up and go further into detail with that. So with that, I would be very delighted to open up the room for any types of questions that anybody might have.
Thanks, Albert.
Again, uh-huh.
Oh, yes, I have a few queued up here that people have sent me in.
Oh, sure.
I mean, this is a critically dense, presentation. So we'd love to invite you back another time to continue it. But just so that the audience is a little bit of input, one of the first questions we got was when you were talking about central banks and them releasing their own digital currency. One was, what will stop central banks or these institutions from creating their own blockchains on top of their already convenient Visa, MasterCard, Railway? Or if you could just talk about how central banks, they could maybe defend their positions of power over these currencies. What do you think? How do you think they would react to these cryptocurrencies?
Yeah, and let me stop sharing my screen as well, so that we can have a more humanly discussion with everybody. So I don't see that feature. If somebody can stop my share screen, that'd be great. But if not, no big deal.
Yeah.
So let's discuss how. Let me see. Stop screen. Okay, great. I think somebody might have done it. I think if I understood it correctly, how will central banks function with existing cryptocurrency technologies like Bitcoin, and where is their place amongst that? They will be a completely separate entity and a bit of a unique and different category, because although they can integrate the blockchain, they're still considered a central authority of money. And ultimately, that money is likely going to be pegged with their existing denomination. In the United States, for example, it would be the United States dollar, right? In Canada, it would be the Canadian dollar. In China, it's the digital yuan. So this already exists right now, particularly in China. The difference between a CDBC, a central bank digital currency, and I hope I'm answering your question with this answer, is that whereas the Bitcoin system is completely decentralized, has an absolute fixed amount, a central bank digital currency is still fiat. It can be produced in unlimited forms as much as the empowering system wants to continue producing it. So although a central bank digital currency has the potential of shifting closer into something like a Bitcoin system, it ultimately will not, unless there is a radical shift to go outside of fiat and move 100% into decentralization, which is unlikely because the entire point of central banking is a philosophy that is completely opposite of what blockchain, or I'm sorry, Bitcoin is doing. So I hope that answered that question, that I understood the question in the way that you've stated it, and a very good question, because this is a huge struggle that's occurring right now. All right, what else do we have? Other questions?
We have one more. I mean, you talked about how the SHA-256 algorithm basically protects, the blockchain from being, changed. So with the rise of quantum computing, and we kind of know some of the, I'm sure you've maybe heard of this question, but how could quantum computing, which some people could say could break the SHA-256, how could that dilute the pool of cryptocurrency, or how do you see that affecting it?
Brian, as soon as you started that question, for some reason, I knew exactly that one of the next terms that were going to come after that was going to be quantum computing. The reason why is because I've heard it so many times, and this is probably one of the most popular arguments against it. I do discuss that in my presentation as one of the criticisms of it. So let's discuss quantum computing itself. Right now, quantum computing is incredibly inaccurate and really can't do anything. It has the potential to do significant things, particularly to solve the polynomial, perhaps either equaling or not equaling a non-polynomial value. However, the qubits in a quantum computer are so erratic that they are incredibly unreliable. So I have no concerns of quantum computing doing anything impressive anytime soon. Perhaps in the future that exists, but fortunately for the blockchain system, these ideas have been considered through the elliptical curve hash algorithm, the elliptical curve cryptography algorithm, which means that as computational power continues to progress, and let's say hypothetically, we have now achieved some form of singularity within quantum computing, and it functions properly, and it's able to do basic tasks and even complex tasks. The elliptical cryptographic security will then continue increasing the level of mathematical complexity to the point in which no system is able to officially break the SHA secure hash algorithm 256-bit key. So this is the answer that probably will completely remove that question from anybody's mind, because it's been thought about a lot of time. And it, in fact, is one of the most popular questions I think I constantly get on how the blockchain can fail or perhaps even completely become eradicated. Now, as somebody who's in the scientific mindset, one will always want to consider that it's a possibility, because if you can't consider that it's a possibility, then it will likely occur. So although I have a very strong argument against why it does not or it will not occur, quantum computing still has the potential of doing something malicious or nefarious to the blockchain, simply because we have no idea the full potential yet. So that's my answer to that wonderful question that I get so many times.
Yeah, thank you, Albert. And we didn't really get to all of the questions because I'm sure everyone is very curious about this topic. So what's the best way for people to reach you, or if they want to contact you or maybe learn more about your presentations and stuff?
Yeah, please connect with me on LinkedIn. This is, of course, no surprise that I say that. I'm sure every meeting anybody goes to, they're going to say that I put my name there. There's no reason why I should have put my name. I sent it as a direct message. But go ahead and find me as on LinkedIn. You can also view my website. This is where I publish a lot of my official publication or research that I'm undergoing currently. That is my first and last name.com, albertfattal.com. And I'm very active on LinkedIn as well. I'd be delighted to network with you. Please connect with me on LinkedIn. I would be so happy to get to know you and chat more about that. And I would really delight the opportunity to have a conversation with not just blockchain, but artificial intelligence itself.
Right. No, and we're delighted to have you this week. And if you do want to see Albert again, we hope that he'll be presenting in 2 weeks when we do our SMIC dry run. So I know you guys are still building the presentation and deciding the speakers for that, but yeah, I'm sure you'll be there. So that SMIC dry run will be for the SMIC program, I think in about 2 weeks. So please be here for that if you're new here. And with that, I think if you don't have anything else, we will close it off for week 14 or 13. I think the numbers get kind of blurred once we get to this part of the semester, but
yeah, that's right.
Awesome.
Thanks, Albie. That was great. For real.
Yeah, it's my pleasure. I am always excited to talk about my absolute passions, and I hope that I was able to provide at least some form of understanding on how the blockchain works and value that I hope makes you a millionaire at some point.
Yeah, hopefully we can finish that presentation soon.
Mm-hmm.
All right. Have a good one, guys.
All right. Have a good one, guys. Thanks everybody for coming.
Thanks, Albie.
It's my pleasure. Thank you, everybody, for hanging.